Hello, everyone, and welcome to Trizzy Trades. This is the place where I can put my ideas out there about what I see and the opportunities that I can take in the market. The kind of trading that you will see me do is semi long term options trading, and I also do some short term wheel strategy trading. There's going to be some trades that I win, and there's going to be some trades that I lose, and I'm going to show you both. The idea is in order to gain money in this market, you're going to have to lose. But I expect to win more when I win than I lose when I lose. Some of the drawings that I will make and some of the indicators that I use, you might not understand yet, but if you follow my channel, I will have videos explaining every single thing that I do. So here's my options portfolio. You can see some of the trades, well, all of the trades that I'm doing right now and the progress of these trades. You will see numbers on the spreadsheet updating because it is directly linked to my Thinkorswim account. And the market is open right now. On Friday, there was a lot of profit I took off the table. One reason is because my rules say take half a position off the table when I hit 100%. After that, I use a trailing stop loss and follow the stock up until my stop is hit or there's a reversal that I see in price action. The second reason I started taking profit was because I am losing confidence in how long this trend is going to last. So I wanted to take at least a little profit while I had the time. Also, I log all of my trades for the year. Well, each year I start over just to keep track of my progress. As you can see, this year so far we're up $3,400. Hopefully we can do much better as the year goes on. You can see each year for me has been getting better and better. For example, this is what I did in 2021, and not so much, but I didn't put that many trades on, and it was a losing year. In 2022, I was working my way up from being down all year in a few trades that I was doing, but I still had a losing year. In 2023, I did the most trades that I've done. Can't even fit it there. I have to go over here. And I finally got out from negative and I had a profitable year. So hopefully here in 2024, I can keep that going. Back to my options portfolio. Just give you a better idea of what I'm thinking. Um, some of the positions I'm not in right now, if you see number of contracts, you see like a zero, that means I'm out of the position. For example, SMH, I'm no longer in this position, but it was probably my most profitable trade for the year. Shout out to the Wall Street Trapper for the idea. And if I was still in it, I'd probably be making more right now, but that's besides the point. I made what I wanted to, and I'm trying not to be greedy. Uh, Procter and Gamble, though, I am in this trade, and here's what I'm thinking from this trade. Procter and Gamble has had a sideways consolidation movement for about 2 years now, and it just recently broke out. So I like to take trades that break out of consolidation like this just to see where it goes. And as of recently, it's pulled back a little bit and is tried to test this upper part of the pendant pattern or the consolidation. And you can see with that lower wick that it's bounced, well, it's kind of deflected from it a little bit, and hopefully we can see that go further or see it go higher. On to my Nike option. I'm actually down 46%. My threshold is 50%, and it expires in pretty much in about a month anyway. So I think at 50%, I'm going to get out of this trade and just cut my losses. I looked at trying to roll this trade down to give me more time, but if anything, I'll probably just get into a new trade or something. We'll see. Well, I should show you what's going on with Nike. I actually profited from this trade already because I caught this inverted head and shoulders and I rode it all the way up. I think I took profit at 100%. And the problem was I was up 217% on my second part of the position, the second half of the position. Earnings happened and it just wiped out all of my gains. But I didn't sell. I held on to it because I wanted to see what was going to happen. And it took a while. It took more time than I thought, but it made this falling wedge pattern, broke out, and now it's headed up. If we get past this 200-day moving average, which is the red line, then I can see us clearing this whole gap. But once again, we shall see. On my Celsius trade, I already took the profit, the little profit that I had from this trade right here, and I got out. I didn't see it going much higher, and if it does, so be it. But it is on the verge of a breakout. So maybe I'll get back into it, maybe I won't. Let's see, Chevron. I took half of the, well, actually, I took more than half of this position off already at 65%. One of the reasons why, because I only have about 2 months left, and that's not a lot of time to me in terms of holding an options trade. So I took more than half off at 65%. And I'm really considering taking the rest off and just taking the money and run. That is my motto. I always just take the money and run. That's what I did with SMH. And I got over 200%, took that money and ran. Google is another position that I'm in right now. I'm up 50% so far. It's going well for me. So hopefully I can get to 100% on that eventually. I got till September on this Google Play, so we'll see. PayPal, I'm out of this. I'm out of this trade because PayPal never treats me right. But I do have another idea about PayPal that I will share with you just a little bit later. Walmart's going good for me right now. Ticker symbol WMT. I'm up 65%, but I only have one contract on this. I wish I had more, but I don't. It's okay. So that means once I get to 100%, I'll just take the whole thing off. I'm not really worried. Palantir, ticker symbol PLTR. This I already took half of the position off at 100%. I'm at 181% on this trade right now. And once I get to 200%, I might take the whole, well, no, I'm not going to take the whole thing off. I think I'm just going to set my stop loss a little bit higher, lock in profit, and just see how far this thing takes me. And then I have a trade on XLY. I have one contract on this one too. So that means if I get to 100% on this, I'm just going to take that off as well. Okay, let's look at some more charts. Starting with Celsius, ticker symbol CELH. Actually, I'll redraw this so you can see what I'm talking about. And in Celsius, this is the daily look right now. We'll start with the weekly. So with the weekly on the Celsius, actually you can see that we've just been trending up in Celsius. We've been just going higher and higher, just like this. And now we are in we were in a drawdown a little bit, or a retracement, and trying our best to push higher. So we'll see. Going on the daily, what I'm looking at though is as it's trending higher, like as we see right here, what you see is this consolidation, or this flag here. And by a flag, I mean you have lower highs and lower lows, but you are pushing up against this upper limit right here. And if I see a break of this flag right here, it'll be a good trading opportunity for me to take advantage of. So that's one thing that I'm looking at. The other one is Dollar General, ticker symbol DG. I'm actually looking to go short on this. If in fact this breaks, I will do this again so you can see what I'm talking about. Go to the weekly. From the weekly, you can see the Dollar General has just been slumming it up. So it's just been just losing and losing and losing. And now it's retracing back up to this level right here. And this level you can say is hitting up against this former support. I guess this support is now acting like resistance and it's trending sideways. So I'm not so confident that Dollar General will revive from here. So I see that on the weekly. Second thing I see on the weekly is if I measure this downward move, there we go. It's hitting up against this 50% fib right here. So it traveled up halfway and it is not going much further. So it could go higher, it could not, I'm not sure, but I just want to be prepared if in fact it continues downward. So if I go to the daily, what I see from the daily is it's been going up and it is consolidating. You have higher lows here, but you also have lower highs here. Well, I'm not going to paste it that way. What I'm going to do is I'm going to say that you have a few higher highs slightly. So you can say that this is a rising wedge right here. And if in fact this stock from the bottom, if it comes up and it's just been teeter-tottering through, hold on. If this stock, as it's been going sideways through like so, and travels back up here somewhere, what I'm looking for is a break below that wedge, and there'll be a good shorting opportunity. What you can see here is the gold line, which is the 50-day moving average, is acting as support right now. It acts as support right here and here. And if it breaks that 50, that means that it just broke that lower limit on this wedge, and it's a good opportunity. It's a suggestion that it might start moving forward. It might start moving downwards. So I might take that short. So that's another thing that I'm looking at. And I think I'll show you one more. And I'll show you my PayPal idea. And PayPal has been disappointing for quite some time now, especially with the competition that they're facing. And nobody really cares about it as much as they used to. Or nobody really is concerned about fintech the way that people used to be. Everybody's on AI now. But looking at PayPal, when I got into the trade, the first thing I was looking at is this inverted head and shoulders right here. If I zoom out, I was looking at this inverted head and shoulders. And it's one of my favorite patterns because it typically works out well for me. And I took this little itty bitty shoulder right here. Maybe I shouldn't have, but whatever. I was about break even in this trade. And then they reported earnings and then just dropped. They gapped down terribly. The thing is I looked at the earnings and I was wondering what was the big idea for the gap down. So the market itself is irrational. The market does what it does. Doesn't mean that the stock itself or the company itself deserves it, but it happens either way. So from here, I would have to determine if do I think the price is going to continue downward, or is it going to have one of those quick recoveries? The reason why I say one of those quick recoveries is the first thing I looked at is I wanted to look at the earnings call, or I wanted to look at the earnings release just to see what they're saying. To me, PayPal did not have a bad earnings. Just looking at some of the numbers that they put out, Q4 2023, those revenue numbers increased 9% to $8 billion. Fiscal year increased 8% to $28 billion. It's not growing as fast as it used to, but it's still growing. So I didn't see that as bad. If I look at some more of the financial results, GAAP operating income increased 39% to $1.7 billion. It doesn't look too bad. And then the operating margin itself increased 468 basis points to 21.5%. 21.5% is not the operating margin of a company that's in a lot of trouble. GAAP earnings per share increased 61% to $1.29. I'm looking like, wait, why did the stock drop so much? What caused the market to sell off on PayPal when I see all of these things? Here, this is probably where active accounts decreased 2% to 426 million. You still have 426 million active accounts. Doesn't really, again, the market's irrational, so you're going to see drops like this. And if you see drops like this, so be it. It might show us an opportunity though. So after this market drop, this was Friday, this is today. My question is, are we just going to see a recovery, and is it going to continue to do what we wanted it to do in the first place? That's the first thing that I'm looking at. Second thing that I'm looking at is, were there other companies that this has happened to and have shown a recovery that has happened quite quickly? Fortinet, which is actually a great company, this happened to twice. Earnings happened. I guess they said something on the earnings call. There was something in earnings release that Wall Street didn't like, and there was a sell off happen. In these two earnings calls right here, this I believe was the third quarter, and this was the second quarter, and it dropped off both times, but this time it actually recovered quite quickly. And looking at if I look at Fortinet and their numbers, shout out to Stock and Lock. I love this website. They had growing revenue. They had growing net income. Well, they had a bad net income quarter this past quarter. Okay, fourth quarter they did, but they had growing net. They had growing net income before that. Solid balance sheet. I bet if I look at their balance sheet, there's no debt. Yep, no short-term debt at all. They had long-term debt. See, long-term debt was $991 million. And to be honest with you, their cash position has $2.186 billion, meaning that they can take the cash that they have right now and just pay off all their debt. And then if you look at their free cash flow, is this 12/31? Yeah, this is fourth quarter. But before the drop in their free cash flow, had growing at 481 million, and it was very similar. It's actually been growing since a few quarters before, so they didn't have a bad, in other words, they did good numbers. However, they had that drop off, and you had that strong recovery. And over the last 2 months, 2.5 months, it's recovered from $44 all the way up to $63. So we recovered $20 within the last 2.5 months. So it begs the question, is this thing going to happen to PayPal? Because PayPal's not putting out bad numbers. I mean, they lost 2% of their active accounts, but you still have 426 million active accounts. Okay. This also happened to Google. This happened twice to Google. I actually was in this trade. This was a little bit late. This was last year. And when the earnings call, they had a really, really good, to me, growing revenue, growing net income, growing free cash flow. I think what happened was their cloud business wasn't doing so well, so Wall Street sold off. And it came down to, what is this? This came down to $126 a share. And then it gapped down probably again. And I think while I was in this trade, I went down because I was doing well in the trade. And then I went down in this trade. And I was not going to sell off. I was not going to take my losses. I was like, there's no way that this trade, or there's no way that this stock is going to continue downward with the numbers that they're putting out. So I held tight. I held fast. I think I was down 60%, and I did not sell. So over time, Google not only recovered, but it surpassed where it was when that earnings call happened. And it's up here. I'm in another Google trade, and guess what happened again? Earnings call, put up good numbers, dropped again. So what I'm thinking, actually, you know what? It's recovering as we speak. So if PayPal didn't put out bad numbers and it had that huge sell-off, are we going to see another recovery? Okay, I have to be honest with you. I've been a losing trader for a long time until I noticed something. Most of the trades that I took just needed enough time to do what I needed them to do. A lot of the losses that I took, I did not have to take at all. In fact, some of my biggest losses would have been some of my biggest winners if I'd have just given those trades enough time. If I would have had a bigger risk tolerance than I had, I probably would have been much better. But it is what it is. Hopefully, as time goes on, I'm going to give it more time and I can be more successful in this market. But that's all for today. Thank you guys for tuning in. If in fact you like my content, make sure that you like, comment, and subscribe, and I'll see you later.